Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in a fairly narrow range, and we know that the market will break outside of this range one way or another, either to the downside or to the upside. So far, responsive buyers have been defending the 79.75 to 81.75 initial support, which is a decent area of support on the larger time frame. And at this point, the markets are fairly oversold, so we could get a bounce today. And even if we attempt a breakdown, we don't necessarily have to continue trending lower on the day time frame. So even if we break the 79.75 to 81.75 area, the markets are getting quite oversold and they are heading into some fairly decent support yet again. So we have to be a bit more cautious on the short side this morning because there may not be enough reward potential, especially if you're initiating a short from a very aggressive price. So heading into the open, we know that the market can probe lower and it can head lower on the day time frame, at least in the morning. We know that the sellers have been dominant, but we now have to start getting a bit more neutral with our bias simply because the markets are getting very extended and heading into bigger picture support. And that's across the board, not just the S&P, but NASDAQ, Russell, they're all heading into fairly decent support and they are fairly oversold. So that can result in attracting responsive buyers on the next swing down. And because we are already fairly oversold, the bounce that we get off of the next push into support, or possibly even right off of initial support here, could be much better than what we've seen over the last couple of days. So we're going to use 79.75 to 81.75 to establish our short-term bias. If the market is holding above that zone, then we know that buyers are fairly active and we could get a short-term reversal back up towards 89.5 to 91.5 and 97.75 to 2100 with potential to test 2106 quarter to 0875. Now that larger bearish market structure is still intact, and the bounce idea is mainly because of the fact that the markets are getting oversold into bigger picture support. But that bigger market structure is still going to be bearish, so that means that we can still expect responsive sellers to be active at the more important areas of resistance. So we're going to be cautious on shorting at the aggressive areas, but once the market gets exhausted into some decent resistance like the 97.75 to 2100, the 2106 quarter to 0875, those are still valid areas where sell side can be active, and from there we can just continue balancing within a range. The only reason we are going to be cautious on the short side now is because of the oversold condition into larger time frame support, which can often result in a bigger and better bounce. So heading into the open, let's see how ES responds to 79.75 to 81.75. That is going to help set the bias and the tone. If we're holding above it, then buyers are active, and it could result in a push back up to at least the 89.5, 91.5, previous VPOC of 95, and 97.75, 2100. If there is continued upside momentum, then perhaps 06 quarter to 0875 can come into play. But at that point, you really start getting exhausted to the upside, and sell side can start to step back in. On the downside, in the event of a break below 79.75, we have the closest support area at 75.76, and followed by 72, and then below that it's 64.75, and then we start running into larger time frame support again. So 59 to 62, 54 half to 56 half, 47 half to 50. These are all fairly strong areas of support, and the expectation would be for buyers to be active there on first test. If you're watching the other markets, in NASDAQ, we have support at 46, 47 to 46.51, followed by 46.25 to 46.30, and those are pretty decent areas of support in NQ. So if NQ is hitting any of those areas of support, and at the same time ES is tagging its own respective support, then that can create the scenario for buyers to step in, and it will just raise the odds of a response there. Looking at Russell, Russell is basically at support around that 1151 to 1152. Buyers are active there. That's pretty decent support in the Russell. If that holds, then again, it can result in a bigger bounce. So this was something that was discussed in yesterday's recap video as well. And so far, that scenario of the markets attracting buyers at good support and being oversold is playing out. So today we are going to be a bit more cautious on the short side, be very mindful of trade location, and understand that the bounce could be better today. So let's see how ES responds to initial support. That'll set the bias and the tone, and we'll take it from there.